Close eye we are looking at today on the NASDAQ. As you can see here, we're backing off just a little bit. We were down about 1% in the pre-market, down 0.87%, but there's pressure on the NASDAQ today. S&P down, pointing lower by 7. Dow also a little bit under pressure as well this morning.
Yeah, the FANG stocks plus Microsoft and Apple are the ones that have led the market higher this year, but we're seeing that not be the case Friday and again this morning. So after tumbling about 2% back on Friday, the NASDAQ's steepest sell-off in 3 weeks.
So why is the tech sell-off continuing this morning? Let's bring in Lou Basenese, founder and chief analyst of Disruptive Technology Research. You know, one of the things that analysts had pointed out here, Lou, was that these companies, the valuations have just gotten too rich. The jump has been too high for your Apple, your Facebook, your Microsoft. Do they have a point?
I think they have a point. I mean, it's relative value. Tech tends to be much more expensive than your boring utility stocks. But that being said, I think you have to focus on the growth. Are these companies slowing down their growth? And the answer is definitively no. I mean, take Facebook as an example. They grew the top line sales by about 45%, and same with bottom line profits. So stock prices ultimately follow earnings, and as long as these tech companies keep expanding their bottom lines, there's no reason to believe that the stock prices can't keep advancing. I do believe one big risk right now for this sell-off to continue is a news vacuum. I mean, we're still another 4 to 6 weeks away from second quarter reports. So in the absence of a catalyst, there's always room for shares to keep falling. But I don't believe this is a long-term threat.
Yeah, that's a good point. And the momentum stocks, the FANG stocks, fell at least 3% on Friday. But it's an overcrowded trade. I mean, come on, Lou, right? Is there any other sectors in tech that you're liking aside from these social media companies?
Well, first, let me answer the first part. I don't believe it's an overcrowded trade because I think tech is all important. I'd argue tech is the new macro. Even non-tech companies rely on technology to power their businesses and to apply leverage to their businesses. So I think you have to be focused on tech no matter where you are. But as far as opportunities, if this sell-off continues, I think you want to focus on the guts that make your gadgets go. Everyone's concerned with owning the next hot item, the next gadget, but there's a lot of chips inside that make those possible. So I'd look to companies like Skyworks, for instance. And then I'd also focus on small cap technology. No matter what happens in the world, whether the Fed raises rates this week or Apple and the rest of the FANG stocks sell off, these small cap technology companies are going to keep innovating. They're not going to miss a beat. So, you know, I think if you want to combine both trends, you focus on a company like GSI Technology, which is a small cap chip company.
Okay, so really quick, we've got the Fed meeting this week. All eyes, of course, are getting on the Fed. We expect them to raise rates. Does that have any effect on technology names this week, in your opinion?
Zip,
okay.
Zilch, nada. Well, look, I mean, think about it.
Well, thanks. No, but go ahead.
Tech companies are the most cash-rich companies in the market. They don't care what the interest rates are. It's not going to change their financial leverage or their borrowing costs. So yeah, it matters absolutely none to tech
Next
companies.
time you're on the show, I want to ask you about Uber. I'm not going to put you on the spot today.
Sure.
But I'm dying to ask you about that culture at Uber. So next
way too overpriced, and man, it's a political turmoil. It looks like right now.
Yeah, that's an understatement. Lou, good to see you. Thank you.
Great to be here.